I'm seeing is ugly. We should expect minimum of 4 to 6 weeks downward pressure. If you're not journaling your trades, then you're gambling, plain and simple. I got wrecked on FTX. So instead of starting off this cycle allocated from a position of strength, I started off this cycle chasing price, preserving capital across cycles. It's the single most humble definition of success.
Cole Garner is the janitor at Alchemical Intelligence. He's been in crypto since 2013, and he builds tools for markets, most notably Tether ratio channel, an on-chain metric with an undefeated record of bullish trade signals dating back 5 years. It's been adopted by 3 on-chain analytics platforms. And believe it or not, he's rumored to be in development on the Panda terminal. Cole, welcome. You have 47,000 followers on X. The question for you, what would they be surprised to hear related to your analysis?
Maroni, thanks for having me. As analysts of this market, we like it when our signals line up. Most of the time, we don't have that luxury. We do have that luxury right now. My signals are all lining up in one direction, but it's not the direction that we want. Oh. It is ugly. What I'm seeing is ugly.
Okay, so
I've been publicly bullish for months.
Yeah,
but I can no longer take that stance.
Oh, okay. So we didn't know we were bringing on the mega bear. He just put on his bear jacket. He's coming out here to share the analysis. You're right. I think that would surprise 47,000 followers on here that have heard so much of this bullish stuff. So break down what you're seeing exactly. I know you look a lot at leading indicators. Break down why you're being so bearish right now.
Yeah. So if there's one leading indicator that I could point to as my lead point that I'd like to make, it's macro order book depth, Bitcoin spot order book depth, aggregate of centralized exchanges. This is visualizing the top 25% of the order book. And what we see is whether it's a bull or bear market, the aggregate book is typically bullish as expressed by a blueprint. The more blue there is on the chart, the more support we should expect market-wide. You don't want to see this metric flip bearish in a bull market. A red print is bearish. A brief minor bearish print, not a big deal, probably a local top, but a deeper, more extended bearish print is concerning. That hasn't happened since the 2022 bear market until last week. I'm going to go ahead and turn on some highlights so that you can see it a little clearer. The last time we had aggregated spot order book depth representing 25% of the book, the top 25%, the last time we had this kind of bearish depth was in the depths of the last bear market. It's only in the past week that we've seen this show up. And unfortunately, all of the other leading indicators that I look to most clearly, they're all pointing in the same direction.
Yeah. So I want you to break down a little bit. You talked about some of these leading indicators. Right now, everything's looking bearish. Why don't you break down a little bit more about sort of how you try to assess the market? What is your system for looking at this? What are some of the other leading indicators that you use to come up with that informed opinion about how you're going to trade?
Yeah. So top down, the number one catalyst across all risk markets is global central bank liquidity. What's happening with our money printers? This is Liquid Vision. Liquid Vision is my own creation. It visualizes global central bank liquidity as a fluid dynamic oscillator with 13 years of backtesting history on Bitcoin and trade signals that backtest only up and to the right. This is obviously a macro markets metric, not specific to crypto. Mm-hmm. And what we're seeing is the very beginnings of a bearish signal after about a month of bullish money printing. This represents the Fed, ECB, China, and Japan aggregated together. And what we should expect based on what I'm seeing here is a minimum of 4 to 6 weeks of downward pressure on risk markets in general. This is what we typically see is about, on average, a 3-month cycle of global central bank liquidity. So we're looking at most likely about 4 to 6 weeks of downward pressure on risk markets.
Okay, so we just had this channel view that was screaming red from a bear perspective. The liquidity view is now giving us another bearish signal. Do you have yet another bearish chart that you're going to bring up that's signaling that we're looking in for a rough patch over the summer?
Yeah, unfortunately, Marconi, I do. Let's switch over to hash ribbons. This is a visualization of hash rate. These are the green and gray lines that you're seeing. I can zoom in on this a little bit more to make it a little bit more clear. The green and gray lines are moving averages of higher time frame hash rate. What we're seeing right now is inversion, also known as miner capitulation. These are periods when inefficient miners with outdated hardware are forced to turn off their miners completely because the cost of mining exceeds the returns that they can expect from block rewards. And when miners can't earn Bitcoin, they are typically forced to sell the Bitcoin to cover costs. And hash rate inevitably always recovers. When that happens, that's bullish. And it's just about the best buy signal that we can expect from this market. But until we get that buy signal, we should expect sideways to bearish price action. Sideways for the next upcoming months is my best case scenario and my base case. That's what I'm hoping we'll get. I'm hoping we don't get a breakdown. And it's also worth pointing out, I'm gonna pull up a related visual. And I haven't seen this talked about much on X, but we're taking a look right now at the previous two halvings. We just had halving back in April. The two halvings that came before that in 2020 and in 2016, both halvings were followed by 160 days of sideways price action, essentially sideways for 5 months straight. It's, I don't know if it's a coincidence that the time frame was so consistent over the previous two halvings, but we're only about halfway through that 160-day period were it to recur. And so we may have a few more months of sideways price action ahead of us. That's what I'm hoping for. I'm hoping we don't get a breakdown. If we do get a breakdown, then what we might encounter, the best comparison that I can make is the summer of 2021, when we had a breakdown following the distribution top in the first half of 21, and then months of chop before a bullish breakback up. And I tend to suspect that we might get that. Yeah, go ahead.
Yeah, I was going to say, so from this analysis, really just more of a historic look back, what you're saying is we can expect up to 160 days of chop, right? As I would say, as the market's digesting this new supply issuance that's coming in from Bitcoin now that it's been halved. And after that, then we can anticipate or hope for some more bullish action. So that would really take us, basically 2 months from now, a little bit over, so mid-September to the October timeframe, when perhaps we could start to see things pick up?
That's right, Marconi. And that does align really well with typical annual seasonality of risk assets. The most bearish period of the year, very consistently, not always, but very much on average, is summer months. leading into an annual capitulation towards the end of September. And then if we're going to get bullish resumption of our uptrend, we would expect that to start roughly October timeframe based on typical annual seasonality. And that's not just Bitcoin seasonality, crypto seasonality. That's seasonality of risk assets in general.
Right. Okay. So I think you've laid out really cleanly what this looks like over the next couple of months. I want to take it back a little bit higher level and just hear a little bit from you about your system. I know I mentioned that before, but you just shared a couple different metrics. As you said, they're leading indicators, but you got some that are really more from a fundamental perspective, where if you're looking at the fundamentals of hash rate, then you've got ones that are looking a little bit more historic data, maybe from more of a price signal perspective. So what is your, I would say, your binding part of your thesis? How do you bring all this together? Is it, some people that we have on here, such as JJ, he talks a lot about the Dixie driving risk on. You have others that are maybe more options focused that are looking at volatility. How do you sort of unify all this analysis into your specific trading thesis?
Yeah, when, it's a complicated situation when we have mixed signals. And in those cases, it's really a basic read of what I'm seeing, and no two moments or situations are ever exactly the same. But when we have confluence like we do now, it's just a straight up bearish signal. And if we're going to start to look at trades, we're going to be looking at shorts. I am personally not taking shorts right now, although I do have a 1x short of my spot exposure open at the moment, so that if we do break down, I have the USD value of my spot exposure locked in.
Okay. So you just mentioned confluence. I just want to get into that a little bit more. So it sounds like your view is, listen, the signals, we talk about the context right now, it's obviously very bearish. There's going to be other times we had you on here be sounding very different. And as you mentioned, you've been very bullish for a long time, but you're looking for how all these signals come together, sort of bridging it all, linking it all together, not really relying on just on, let's say, the Dixie as a narrative or volatility as a narrative. It's really, how do all these signals come, 5 out of 10, so to speak? What are they saying to really give you the confidence to move into a trade?
Yeah, and don't get me wrong, Marconi, the dollar drives global markets. I'm going to be looking closely at that too. Right now, there's no defined strong direction on the dollar, and so I'm defaulting to my leading indicators. Mm-hmm. But typically those will line up as well. Okay.
No, that's interesting. So you walked us through some really strong indicators, obviously showing the signals right now to be very bearish, but looking at sort of the buying behavior, looking at the global liquidity, and then sort of the seasonality of it. Are there other metrics that you are kind of go to that you find really insightful for really giving that signal of it's time to be in or out of the market, maybe going short or going long, that you'd share with this audience?
Absolutely. So we were speaking earlier about Tether ratio channel that's currently in development for Panda Terminal. Mm-hmm. This is my creation. It's a long-term smoothed RSI of stablecoin supply ratio, which is simply the ratio of Bitcoin market cap to stablecoin market cap at any given time. It's an on-chain metric that I built on Glassnode. And of course, stablecoin market cap captures more than just Tether, but let's face it, Tether just completely dominates the asset class. And this is one of the best leading indicators I've ever had the pleasure of working with. This is the one we were mentioning earlier, has an currently undefeated track record of bullish trade signals. This is this highlight view makes it easier to see that track record of bullish signals dating back to 2019. And more generically, it's a really good leading indicator of market direction overall. And right now, switching back to the live chart, market direction is unambiguously bearish. Here too, what we can see, if we zoom in a little bit more, the yellow line going straight down until that yellow line crosses over the white line like it did here at the beginning of May, then we're looking at more expectation of downward pressure on crypto asset price across the asset class.
Yeah, that couldn't be any clearer. And I see you put that out on X. How often are you trading these or sharing these signals on X? Out of curiosity.
I've been pretty quiet over the last few months. That's about to change. I've been very focused on a separate project, unrelated, that's had my full attention. And now I'm going to be sharing a lot more moving forward for the rest of the year.
I'm sure that the 47,000 and those who haven't come across it yet, they're going to be very happy to be getting some of this analysis out there. So, okay, so you just looked at the tether ratio. You just mentioned that has an undefeated track record at this point. It was like Mike Tyson in the early 90s, late 80s, until it finally got taken down. Everything changes over time. Are there other metrics? I know I kind of think of you, we've had conversations offline. It feels like you've got a bag of tricks just kind of waiting there for these other metrics that you've developed over time. You found really insightful. Are there other ones you'd want to share today?
Yeah, absolutely. Let's have a look at the beast. The beast I built a few years ago. It measures cumulative spot Bitcoin volume using the Bitcoin index, visualizing cycles of accumulation and distribution. This indicator looks complex. It is complex, but its signals are simple and historically accurate. It has insane backtest returns dating back all the way to 2010. As you can see, its backtest track record is just straight up and to the right with a really comfortable low max drawdown and just a long list of numbers down there for the net profit if we're using backtest returns. And what it visualizes is a really good set of buy and sell signals. The last buy signal that we got happened right here at the end of January, right after the consolidation ended following the Bitcoin spot ETF approval. And what followed was the move straight up to 70K, give or take. And as you can see, right at this point that I'm mousing over, where our sell signal kicked in, that was the local top, hopefully not the cycle top. I don't think it is the cycle top, but there it was right there at the point where green turned to red, the top in March at 73K. And we've been sideways since in a consolidation going back 4 months. So what I'm looking for from the beast is another upturn of this currently red print to cross over the horizontal median that's currently red. And when red crosses white and becomes green, that's a buy signal. And it is possible that we could get one within just a couple weeks. I would say just eyeballing this, that is entirely possible if we get a surge of spot volume, which it's possible. The Ethereum spot ETF approval that analysts are widely expecting to come in any day now, if that serves as a catalyst to bring capital on chain and institutional investors into the crypto asset ecosystem. If that kicks this market back into bull mode, then we should expect to see a bullish cross follow sometime in July. Could even be just a couple of weeks away. But until we see that, my bias is sideways to bearish.
Okay. Well, and everything else that you've shared is thus far from a liquidity perspective, the stablecoin Tether, which has a 100% hit rate, everything, again, just continues to back up that thesis. There's a couple of questions I want to ask that are more general, that maybe are a little bit more evergreen, if you will, because they're going in through the history of how you develop these. But before I do that, is there any other metrics that you want to share? You've got this, again, this bag of tricks, so to speak. Anything else you'd want to share before we get into some of those questions?
No, that's good. Let's move on.
Yeah, so I guess you've been in crypto a ways. We mentioned at the start of this broadcast. What has changed in terms of developing these metrics? And you mentioned some of these are going back. They've got a really good hit rate going back to all the way back to 2010. Are you seeing anything right now that's changing in terms of data availability, data accuracy, the efficacy of these metrics to still give you really strong signals, especially as these ETFs and institutions start to take up larger amounts of capital within the ecosystem? Does that play into how effective these signals are from a buy, sell, or hold perspective?
I would say that the quality of the data that's available and the breadth of the data that's available, it just keeps getting better. And this has been an exploratory process throughout my career as an analyst, identifying these data sources and these metrics that get more effective as I refine my own process and find metrics that are higher quality. And what I like to do whenever possible is utilize data that gets as close as possible to primal market mechanics. We're talking about catalysts that cut to the core of what drives markets. So for instance, what drives risk markets overall more than anything else? Central bank liquidity. That was not something that I was looking at 3 years ago or 5 years ago. It's something that I'm looking very closely at right now. Smart money behavior on chain, capital flows on chain, centralized spot order book depth. Those are all data sources that I wasn't considering a cycle ago, 2 cycles ago. I wish I had been.
Sure. Well, yeah, there's always that retrospective view of wanting more data, being able, or just knowing what to look at. But it's a journey, right? Not a destination per se. Walk me through a little bit more what you think. You mentioned mechanics. Liquidity has to be the linchpin, right? Do you have more or less of it? Are there other things that you're looking at beyond that you would say fit into that mechanics box that perhaps traders should be aware of, but really aren't?
Yeah. So when we talk about capital flows on chain, that is the most powerful driver. If I were to point to one metric or one dynamic that seems to drive price more than anything else, it is capital flows into stable coins. And so, for instance, if we just take a look at Tether supply, which from a raw view, it's one of the best leading indicators that I've ever come across. That tends to drive market direction. And what we're seeing right now, what I've highlighted on my chart, is there's been a reduction in Tether supply. This just happened yesterday. We saw yesterday the single largest reduction in Tether supply in the past 6 months. The last time we got a reduction in Tether supply burn of this magnitude, that happened right before the beginning of the next of the big move up that started in January of this year. And there's a little bit of bullish opium for you. Perhaps, hopefully, perhaps this reduction in Tether supply is the last shakeout before a move up. I want to see that. I'm not going to get too excited about it because there are too many bearish indicators at play as well. But yeah,
so
Tether supply, stablecoin supply, it's just an incredibly useful dynamic driver of market direction across crypto markets, I find.
Okay, so Cole, you just walked us through a series of metrics, really breaking down, obviously all of them looking very bearish right now. At some point they'll look bullish, so we'll have to bring you back on to talk about that, but really good leading indicators of when to get into trades and perhaps really when to be stepping away from the market, sitting in stables, sitting in cash. I want to ask you some very meat and potato types of questions for those who are interested in how you're actually using these signals. So just walk through, what do you actually trade? Are you more of just a spot trader? Do you look at perpetuals? Do you look at options? I think you mentioned a little bit maybe about a perpetual position you may have open before, but what do you typically trade with these signals?
Yeah, so more and more these days, I'm focused on algorithmic trading of perpetuals. So in this particular moment in time, I'm going to deploy a short algo that only goes short in perpetuals markets. That's been it's been a fascinating journey getting that up and running. As a non-engineer, I'm a horrible coder. Fortunately, I have a great engineering team behind me. But despite that, algorithmic trading has been hard, but not for the reasons that you'd expect. You'd naturally expect the hard part of executing an algorithmic trading strategy would be the strategy.
Yeah.
But it turns out that that's not been the hardest part. It's been the order execution infrastructure, the boring stuff, the plumbing.
The plumbing.
I've worked with half a dozen automated execution providers, and my experience has been that all of them suck, each in their own snowflake, unique way. So it's still a work in progress.
Right. So just to unpack that a little bit more, are you saying like the API infrastructure and how to actually program from that perspective, taking the directions that's coming out of the algo, putting that into an API that it can actually interface with these exchanges? That's just very difficult to kind of get up and running?
There are APIs with a UI built on top of them by kind of third-party infrastructure providers. There are a couple dozen of them active in crypto markets right now, and all of them say they just work. Their systems just work. And then when I set them all up and flip the switch,
yeah,
they're like, "Oh, you wanted to just work? Yeah, you're going to have to work a little bit harder for that."
Oh, the branding doesn't quite match the promise or the actual delivery of it. Okay, so algorithmic trading of perpetuals, if I heard that correctly, that's what you've been focused on right now. And why did you really get into that versus some of these other instruments? Unexplored, untapped area, or it really melded very well with all these metrics that you have? What was the thinking behind that?
Yeah, I want to be able to trade in both directions. So that forces me to move beyond spot. Part of me would love to only trade spot. That would be great, except I can't short. So this is perpetuals are kind of made for this current market environment. Options is a huge unexplored arena, well, unexplored by me yet. Yeah. I know nothing about it. I want to learn it. I might just sit down with a recording of the options show that you just recorded and watch that at some point. But for now, perpetuals makes the most sense for me personally.
Got it. Well, yes, I would say I'll give a plug for that option show. We've obviously talked a lot about it when JJ's on the show on the Trading Pit and through his videos, and then we just had the options roundtable. We'll try and put a link to that in this interview for anyone who's curious about that. Some really great speakers about their journey getting into options, as well as what they're seeing now and how to use these from an effective standpoint. But to what you just shared, there's many other ways to trade the markets and to be effective at it. So it's interesting that you're doing these automated trades. I want to get into some of those success stories. I want to hear a little bit more about what your thinking is on the future and what you're hoping would be the base case for the top of the market. And I want to explore that a little bit more. Before I do that, though, I do want to ask you about risk management, because I feel like this doesn't get enough interest in the markets. If you listen to professional traders and even just experienced semi-pros, they talk a lot about risk management. Whereas the new generation, the ones that are just starting out that journey, they're really looking for the biggest return, the quickest that they can. How do you think about risk management? What does that term, that phrase even mean to you? Is it specific to the type of instruments you trade? Is it really more about the size of the trades? Is it putting in stop losses or using a certain amount of margin if you're doing the perpetuals? How do you think about risk management and making it work so that you continue to maintain a healthy portfolio?
Yeah, position sizing it's just so critical to make sure that the distance of my stop loss is synchronized with the position size that I take on. If it's not, then I'm going to have a big problem if the trade starts to go against me, and that's going to put me at risk of getting emotional. And more than anything else in this market, getting emotional, being anything other than a stone cold killer, it's just a great big trap. And that, for me personally, what's going to wind up happening if my position sizing is not correct is the moment that trade starts to go against me, I'm going to have an overwhelming urge to close it out manually, which just leads to a loss before my stop loss even gets hit. So I've learned that I just need to size my trades correctly, and that's just going to help me preserve capital overall. And as a trader, that's the single most important thing that we all have to be focused on. Over the long haul, through multiple cycles, through 85% drawdowns on Bitcoin, 99% drawdowns on shitcoins, through PvP environments, through meltdowns like Luna last cycle, like FTX that I got caught in last cycle, preserving capital across cycles. It's the single most humble definition of success that I can name.
That is such a well put phrase. Preserving capital over the cycles and the humility and the humbling factor of that. I think anybody who's traded or even just held throughout these cycles and round trip some of these gains has felt that. And so that positioning of it, keeping your position something that you can watch go up and down, allowing the process take over rather than the emotions. I mean, that is some really, honestly, very, very practical advice that I think anybody could actually take and implement into their own system. Let's transition. I want to talk a little bit more about that. You've got the wisdom that you just shared with anybody, kind of the way in which you see this as a multi-cycle way to continue to stack gains over time. What would you say is your biggest win being in these markets as long as you have?
There are plenty of trades that I could tell you about, but my biggest win of all was not a trade per se. And when we talk about crypto, this is you don't run into the problem that I'm about to dive into in any other market.
There's a lot to take in there. A lot to take in there. All right, break it down. Why the crypto-centric the issue that you're running into?
I bought my first coins way back in 2013. I knew nothing about crypto, and predictably, what's coming next.
Yep.
I lost my keys. I didn't even know that I had lost my keys until 2017. The day I figured it out, I thought to myself, I'm going to carry this weight for the rest of my life. I could have bought a house with those coins at today's prices, and went through the whole 2017 bull with that cloud hanging over me.
Oh my gosh. Talk about motivation to win it all back.
For real, Marconi. And it was in the depths of the 2018 bear market that I read this news story, I think in the Wall Street Journal, about a white hat hacker named Bitcoin Dave, who cracks wallets. And he claimed to take 20% of the contents of your wallet if he cracked it and selflessly leave the rest behind. And I figured I've got literally nothing to lose.
Yeah.
The definition of nothing to lose, I emailed him. A day later, he emailed me back. He had cracked my wallet. He could have taken it all, but true to his word, he took 20%, left the rest. I saw that email and I literally collapsed on the floor of my home office, started convulsing, laughing like a maniac. Absolutely transcendent moment. My wife walks in, finds me collapsed on the floor laughing. She's like, Cole, what's wrong with you? What's going on? I'm like, honey, I'm having one of the best moments of my life. Here I am on the floor, got all my coins back. That was my biggest win.
Wow. Oh my God. And you kept them through, you kept your coins through the 2017 market. Can we, hopefully, I'm hoping that you didn't get them on Monday and then by Friday you traded them away.
No. They were untouchable through 2017 and then regained access to that address in 2018.
Excellent.
It was a beautiful moment.
That is a beautiful moment. I'm not sure if this service is still being offered by Crypto Dave, but I imagine there's some people, I think JJ's mentioned having an issue. I think it was a different chain though. That is a pretty amazing win. I want to come back though, specific to trading. You mentioned sort of being able to preserve capital as kind of a key milestone, how you think about trading, sizing small enough. Do you think about sizing in terms of percentages? Is it 5%, 2%, 1%, or is there somewhere else in which you're sizing these positions?
I do. It's specifically percentages. So if for instance, you have $100,000 portfolio or account, 1% of that is you need to make sure that you size your position so that if your stop gets hit, you're going to lose exactly $1,000. So the first step of that process is identifying where to set your stop loss. And based on how far your stop loss is away from your entry, that's going to determine your position size. And that needs to net out at $1,000 if you're looking at 1% of a $100,000 account.
Got it. Okay. Some good numbers, round numbers to kind of think about. So you've got this idea of preserving capital over cycles. You've got this idea that of making a process, which you've just described really nicely, about being able to invest and not, keep that 1% of the portfolio per trade. Are there other principles that you've identified that have helped you be a successful trader over time? I hear a lot of people talking about the process and being able to keep that process and be unemotional. You've just highlighted that. Is there anything else that you'd share with people that you think has really kind of helped you develop and maybe some of that wisdom that you now have as a trader?
If you're not journaling your trades, then you're gambling. Plain and simple. I hate journaling my trades. I hate it. But if I don't do it, then I have no system in place to learn from my mistakes. And I will make mistakes. I'll make a lot of them. I am more human than most. And I am an emotional beast. It's just so crucial to track every emotional state that I'm experiencing as the trade unfolds. So I understand how my vision is colored and how it's affecting the decisions that I'm making. Your system, whatever your system is, have a system. And that system, no matter how cut and dried and black and white that system is, we as emotional creatures are going to find ways to overthink it and take steps to sabotage ourselves by stepping outside of our system. And the check and balance that keeps that all together is that journaling process, so that if I make a mistake and make an emotional choice that I regret, at least I can look back on it and learn from it and carry that lesson forward.
Get another powerful statement. What would you say is the hardest lesson you've had to learn going through this?
Marconi, I got wrecked on FTX. And the hardest thing about that was not the loss of funds. It was the emotional and psychological mess that got inside this bald head following that loss. The psychological impact it had on my family, my relationship with my wife, and all of that is better now. But at the time, as you'll recall, what happened at the same time as the FTX meltdown was the cycle bottom. And in the middle of that whole mess, I was so distracted that I completely failed to buy the bottom. So instead of starting off this cycle allocated from a position of strength, I started off this cycle chasing price at the same time that I was chasing emotional and psychological recovery. And the impact of a situation that throws you off balance can have ripple effects that make everything harder. Not buying the bottom, that made everything harder at the start of this cycle.
Wow. Yeah. You talk about FTX. I have my own challenges with that, making some poor decisions on selling, losing conviction in this space. And so I can absolutely relate to you. I wasn't impacted by FTX. Fortunately, I made some decisions to step away from it, but the psychological nature of having to go through that, the loss that so many people experienced, should not be understated. Should not. I mean, I think you did such a nice job, beautiful job of explaining more of the psychological, because everyone's talking about the money side of it, which is painful by itself. But those relationships that you have to explain, the way in which you're trying to reduce the harm that's been caused psychologically, that's a massive challenge. So definitely something to consider. What have you done to prepare yourself? You talk about learning from these lessons. What have you done specifically to make sure that you're not in the same predicament going forward?
One of the things that I did is just step away from trading entirely for a period of months to get more perspective and just a hard reset on my mindset, and just a top-down overhaul of how I approach investing and trading overall in general, and including a system for selling the top and buying the bottom, so that that mistake does not get made again.
Mm-hmm.
And the point in the ridiculously skewed crypto market cycles that we get to navigate, when that's most likely to happen is at the bottom. So when our next bottom comes, whatever the catastrophe that we find ourselves surrounded by, whether it affects me personally or not, I have a system in place now for buying the bottom, period, end of statement. It's just going to happen, and my emotional state is not going to be an impediment to that, I hope. But but it's just a simple set of if-then statements based on some really simple metrics, and I just have to follow through on that, and that's not rocket science.
Yeah, I think that leads to the last part of what I wanted to ask you about today, which is, by the way, I mean, so many people don't, they haven't taken the time to figure out how what do I do differently. You've actually developed an entirely new system to buy the bottom and buy the top, which I just think is remarkable and fantastic. Walk us through, you start off the show talking about being bearish in the near term. Walk us through what you're looking for, going into the rest of second half of 2024 and even going into 2025. Do you have expectations in mind? You see these price targets are all over X. Are you thinking about it that way? Are you looking to be more reactive to what the market's giving and really you're not setting any expectations? How do you navigate that when that question comes up?
Yeah, I do have expectations. I expect that regardless of bearish price action or sideways price action that we see potentially for months to come, I suspect that at the end of that is a bullish breakout. And we know that we're at the point, or near the point in the 4-year global central bank liquidity cycle where we hit that banana zone. And there are a lot of people that hate that banana zone. But if you dig into what it means, what it represents, it's legit. And it's only a matter of time before those printers start printing hard. And so what I'm looking for is for hash rate to recover, for hash ribbons to flip bullish. I'm looking for aggregated spot order book depth that I showed you at the beginning of this talk to flip bullish. I'm looking for tether supply to make substantial higher highs. I'm looking for global central bank liquidity to flip bullish, both in the raw data, which I didn't show in this chart, but also in liquid vision, my metric that visualizes those roughly 3-month global liquidity cycles. I'm looking for all of those to line up bullish in the same way that they're currently lining up bearish. That feels inevitable, just a matter of time. No guarantees in life or in markets, but I suspect we do see that in the fall of this year, and if not then in 2025.
Can I pin you down on a price target? Is that something that you thought about?
Everybody loves price targets.
Don't they? Now, just to be clear, just so you're in good company, we have, I believe, Arthur Hayes is at the 750 to 1 million by the end of this cycle, which he hasn't quite specified exactly when that would be. I think maybe end of 2025, early 2026. I've seen some other people that are a little bit less exuberant, maybe looking at the 150 to 225. And I think just on our last option show, we actually had 3 different people give their thoughts. It was 100, 150, and 225 by the end of the cycle. So just know that whatever you give, if you give something, it's got a wide range. I think just like any other analyst, we have a wide range and reserve the right to come back and say I was wrong.
Yeah, well, Marconi, I got to tell you, Arthur Hayes is a wiser man than I am. I trust that guy better than most. I think his price targets are high for this cycle. I agree with that 150 to 250 range. I think the top of this cycle is going to be somewhere in between that high and low figure.
That makes for exciting times. And I just want to put out a plug here. You've developed this system that you're using to both time the top and the bottom. And I believe you're looking at releasing that soon, if I'm not right. That's something you're going to be bringing to market. Maybe you want to share a little bit about that as we wrap up.
That's right. In the last bull, I built a framework and a strategy to optimize my own profit taking as close to the top as possible inside a parabolic advance. And this past year, I've refined that and built on top of that and built a course around that so that all my friends can use it too. And we can all benefit from the robust strategy that I put together. One of the beautiful things about a global mania that we will inevitably find ourselves in if the parabolic advance materializes is that in a global mania, alpha leaks don't matter. So I've put together a course that talks through my entire framework and strategy, comes with a bunch of tools. It's currently in closed beta at alchemicalintel.com. Alchemical Intelligence is the name of my own analyst house, and I'm going to start tweeting about that real soon. It is good work. I have to say I am real proud of it, and I think it might just sell the top at the end of this cycle.
I love it. I love it. We're going to have to bring you back here in a couple of months, see how these cycles are moving when the liquidity and some of these metrics start to change, and just to see how this system is looking, and maybe as soon as we get closer to the actual top of the market of this parabolic move, getting you to come back on here, maybe share some of that alpha. But Cole Garner, I want to thank you so much for coming on for today's interview. And everyone can find you on X. Is it Cole Garner? I don't have your exact handle. How would they find you?
Yeah, it's at Cole Garner's Take on X.
Okay. All right. And if you haven't checked him out already, shame on you. He's sharing all kinds of incredible alpha, just fantastic information. And obviously, if you haven't heard of him before, obviously after hearing him talk today, you probably have a better sense of the kind of an analysis that he's doing. So definitely go check him out. Cole, it was an absolute pleasure. I look forward to having you back on here at XC.
Marconi, thank you so much.
All right. Cheers, man. You have a good one.
Yeah, you too.